What's going on, guys? Welcome to the JWK Show 2. A quick announcement. The main channel should be back up, so we will be uploading the XRP videos there, and we will be uploading XLM and other crypto-related content on this channel, the JWK Show 2. So just a quick heads up before we begin today's episode. Now, today was a massive day for several reasons. We do have the official end of the Ripple versus SEC case, as we do have the SEC dropping their appeal, and we also have a major acquisition of Rail Financial, and with this we have Ripple taking over the stablecoin market. We had 10% of stablecoin global transactions going through Rail, right? So this is one of Ripple's biggest acquisitions, and Rail Financial also holds licenses and disclosures in these following states. We have Alaska, Arizona, Arkansas, Colorado, Connecticut, Delaware, District of Columbia. We have Illinois, Kansas, Kentucky, Maine, Maryland, Michigan, Minnesota, Ohio, Oklahoma, and many more. You guys can pause the video and take a look. But this essentially means we have all of these states to use XRP and the RLUSD. So we're about to see, as we say, so much money flowing into XRP Ledger, into the RLUSD, increasing the price of XRP, which is what we all want at the end. And we have Johnny Dean responding to this news as well. He says, another Ripple acquisition with Ripple's balance sheet. It won't be the last. So we are expecting even more acquisitions, as confirmed by Ripple a couple of months ago. And we also have the Financial Markets Quality Conference. We have Stu Alarati, who is the CLO of Ripple, attending the event alongside with Samara Cohen, who is the CIO for ETF and index investments for Blackrock. We have Thomas Farley, Chief Executive Officer at Bullish, and Bo Lee, Deputy Managing Director at the IMF. So we have Stu Alarati, Ripple, speaking alongside with key members of the financial system. We have BlackRock, IMF, and guys, this means that we could see that BlackRock XRP ETF filing. So this is another massive crypto event. Guys, obviously we have Ripple alongside the 1% members, and we have confirmation from Bank of America as well of 99% of crypto assets in existence today disappearing. And guys, this has also been mentioned by Brad Garlinghouse as well. We will see the exact same fates as we saw with the dot-com bubble happening to cryptos, and only a handful of cryptocurrencies surviving. And according to BOA, we have 5 mainstream blockchains. We have XRP and the other ISO tokens. We can see of the approximately 75 blockchain platform providers, not all they will survive. By 2025, there will be 5 blockchain DLT platforms. And guys, based on everything going on, we have XRP securing one of the spots. And if you guys hold one of the 5 DLT platforms, you guys can be holding the next Google, Apple, Amazon, and so on. And lastly, we have a major prediction by David Schwartz from David Schwartz. Let's take a look at this video.
I think what's going to happen is there's going to be use cases where digital assets like XRP and Bitcoin make sense, where volatility is either an advantage or not a disadvantage. And there'll be other cases where a sort of more stable token like RLUSD or some other stablecoin will make more sense, where either the volatility is a disadvantage or where the recipient doesn't want to deal with the complexity of having a volatile asset. So I think you're going to see enterprise use cases in everything from trade finance to tokenized real world assets. Essentially, almost everything is a payment. Like a loan is a payment, right? If you borrow money from me, I pay it to you and you pay me back. Tokenized securities, if you're buying Apple stock, you're spending money to buy that Apple stock. And when you sell it, there's always a payment on the other side. And so I think one use case for stablecoins will be as a payment asset where the recipient doesn't want to deal with the volatility and where the recipient just wants to sort of have a fixed amount of payment. It's especially going to be interesting for applications where the endpoint recipient of the funds is not somebody who's sort of interested in participating in the digital asset space, like you're buying groceries. Your grocery store owner might be interested in participating in the digital asset space, but probably they just want to receive dollars. And so it allows the endpoints to not have the complexity. How useful will be sort of inside the internals and the machinery, I think Collateral will be one case. So like if you use a digital asset for collateral, you have to significantly over collateralize. Like if you're going to use XRP as collateral, it could have in value tomorrow. It probably won't, but it could. And if you're using it as collateral, the person who's accepting the collateral probably doesn't want to take that risk. So it's a little awkward to use digital assets for collateral unless if you have a lot of it and it's a tax optimization, yeah. But we're not going to rebuild the new financial system on tax optimization for people who have lots of digital assets, right? Like for collateral, like you're going to want more stable assets. And one of the interesting things from Ripple's point of view is like prime brokerages like Hidden Road, which we're in the process of acquiring, like have a lot of collateral. And so looking at very efficient ways to use stable coins like RLUSD to have that collateral easier to move around and more liquid and so on.
That's it for the video. Hope you guys enjoyed, and I'll see you guys in the next one.